All right. Good morning, trade pros. Welcome to the morning market update for Thursday, January 31st. Wow, January is already over almost. This is George Trade Pro Academy. Victorio's in today. You can probably see his blue screen here in the corner of the camera view. Um, don't you hate it when Windows tells you there's an update and the first like 80% goes really fast? The last 20 take forever. And then when it hits 100, it sits there for another hour. That's why Microsoft is down on yesterday. So Victorio's computer single-handedly. Um, so anyways, in today's morning market update, we're going to talk about a few things. I got a really fascinating morning market fun fact. We're going to talk about JP, our boy JP, Jerome Powell, and how he appeased the markets yesterday and why I think it could lead to another pretty big rally in the weeks to come if we could get over this overhead resistance. I'm going to tell you about a new course we're starting, and then we're going to look at a few economic updates this morning and what's important for you tomorrow. All right, so let's get started with the morning market fun fact. On this day in 1940, this is fascinating, the first monthly Social Security check was issued to Ida Mae Fuller. That was her name. She was a 65-year-old retired legal secretary in Ludlow, Vermont. And because Social Security was only launched 3 years before she retired, she only paid a total of $24.75 in Social Security taxes. This is where you're going to realize this is probably the best investment in the history of investing. This is Ida Mae Fuller is the greatest investor you never heard of. Warren Buffett would be jealous. Ray Dalio, all those guys. Take note. You're about to hear some crazy stuff. By the time she passed away in 1975 at the age of 100, rest in peace to her. I know 1975 was a long time ago, but she collected a lifetime total of $23,000 in Social Security benefits, nearly 1,000 times what she paid in at the beginning. So pretty good investment, thousand-fold return on her investment, and lived well into her late 90s, into 100 years old. So she fully capitalized. Good for you, Ida Mae Fuller. Good for you. Wish I could have interviewed you for the morning market update. I'll tell you this: there's a lot of Miss Fullers around in today's environment. One of her team members yesterday mentioned how underfunded the Social Security benefits are, and around the world, it's not just the United States. In Canada, pension benefits and pension fund companies are struggling. They used to be deathly afraid of equities. They wouldn't buy many equities because they would say it's a risky investment. We'll get our bonds and get our 3-4% a year, and we're good to go. And we'll have a part of it that's more risky. But in today's environment, they're forced to take on more risk. And you see a lot of pension funds that are in a lot of crazy long positions in equity because they need to make that return, because they've promised payouts to their retirees on a 5% return basis. Where can you get that today with a relative degree of guarantee? Nowhere. That's where rates are so low. All right. And if you are able to get it, you have to pay a lot more risk. So it's an interesting dynamic. I think this story really kind of hits home on the situation that we're in on a pension front. We're underfunded in Canada. The teachers' pension funds are one of the biggest underfunded ones, and a lot of others. So, I mean, this will be one of those mysteries, and I'm going to find out how it plays out. Because here's the truth: I don't expect to collect a penny of pension funds, and neither will you, Victoria, because you're younger. Good luck to you, buddy. You better start saving. There isn't going to be enough to go around. That's just the truth. Yesterday, Jerome Powell had a press conference at 2:30, and the FOMC came out with an announcement at 2 p.m. Eastern. And it was very important because we prepared you for it yesterday. We said we don't think he's going to be too dovish because he doesn't need to. And boy, were we wrong. Jerome Powell grew a set of wings and flew off like a dove. In yesterday's FOMC statement press conference, the Fed did something very important. Now, we were prepared for this event, and I'll tell you about our success and how we traded it. We were prepared, and it wasn't expected. The market expected a little dose of this dovishness, but they got a lot more than they hoped for. So Jerome Powell didn't say in the statement, the Federal Reserve speakers agreed to remove this one statement, gradual interest rate hikes. That's gone from their statement, which means they're not thinking about gradual interest rate hikes anymore, which means we're at the neutral rate, 2 hikes before we were supposed to get there. So for all intents and purposes, Fed hiking is done. They're on pause. They're waiting for more data. It gets a little controversial in the moment here, though, because the message he sent was there's no more hikes. All right, we're not going to hike rates as much anymore. We had a neutral rate that we were really far away from in September, and with one hike, apparently we got there. And that's sort of where the language started to change in September. He said, we're really far from the neutral rate. In October, when the markets crashed, he backtracked Jerome Powell and said, we're actually really close to the bottom end of the band of where we're targeting as neutral. And that was, oddly enough, the last hike that he did. And now he's there. So now we're at the level where the Fed's going to hold. Here's the interesting part, though. Before neutral rate was achieved, we stopped. All right. He acknowledged that inflation is lower than expected in the short term, which should mean that you have an opportunity to hike a little bit. But he said the long-term view is still that inflation will be higher, even though it's short-term lower. And he also said the jobs market is very strong. It's on fire. It's a really tight job market, the labor market. And then he goes on to say, but not as tight as it was in 2018, because if he's giving all these rosy outlooks, they're going to ask him, why'd you stop hiking rates then? And he doesn't want to say the truth being, this is the statement that you should hear from him. He should say, look, I'm supporting the equity market. That's what I'm concerned about. The Fed mandate is not employment. It's not inflation. It's not the overall good of the consumer. It's the overall health and strength of the stock market, equities. That's what they've kind of tied their boat to. And if you missed that, I got your back. Don't worry. So that was the interesting part. Yet he flipped dovish, and he said another thing he mentioned in his conference that was interesting is he said we're prepared to make adjustments to our balance sheet, which is what was at the forefront of this whole meeting, as necessary. But before that, we'll have other tools at our disposal. So not only did he say we'll be looking at adjusting the balance sheet, he also said that he has other stuff that they're planning. So they've been thinking about this. So the Fed just went full dove mode. They went from let's hike rates, let's unwind the balance sheet, let's go, to stopping, all with just a 10% drop in the market. So you know where their incentives are. So that's what the Federal Reserve did. The markets obviously like that. The stocks got pumped higher yesterday on the news, and our trading room was right on that trend. We got long actually right around the open. One of our members got long. I got long a little bit higher in the low 70s and rode this thing all the way up to 89.75. We're trading at 70. I was telling the team, one of our indicators at the top is flashing red. We're going to go up there. That's going to be a target. But don't wait for the 90. Look to get out at 88.75. All right, 89 even, 89 quarter if you want to get a little more excited. And it goes up to one tick off of that reversal level and sold off again into the close. Hang on a second. So that was a huge opportunity. We did really good. Some of us caught 10 points. Yesterday, one of our members had a record profit day, which I was really proud of him for. A couple of them did a couple $1,000, and I'm super proud of our team. We all did good, and that was in the elite team room. So I got to tell you about this as well. So on Monday at 8 p.m. Eastern, we're starting a new futures course. I guarantee you this will be the best online course that you've ever taken and the best online course for futures day trading in the universe. All right, I got Martians calling me, asking me if they could license out the technology. I've put them on hold. I want you guys to get it first. We're going to be doing it live. So we're going to do 2 lessons a night on Mondays and Thursdays at 8 p.m. Eastern, except for Valentine's Day, because I want you guys to not sleep on the couch. And then the 21st of February, the next Thursday, we'll have to skip as well. But other than that, Mondays and Thursdays, 8 p.m., 2 lessons a night. We're going to be teaching this course, groundbreaking course, proprietary grade level, in a live fashion. And the last time we did that is 2016. But the market's changed a lot since 2016. And I want you guys to be using current information. A lot of what we taught in 2016 has evolved, and we're going to teach it to you again. And this is the benefit of being a TRADEPRO Academy, is because we are traders ourselves. We make sure we create education that works in today's market, not in the 90s. Hey, if you see a head and shoulders pattern, just get long above the break of the neckline. Yeah, that worked in the 90s. Great. Try that today and see what happens. All right. Anywho, join us. Find out what the hype's about. You have 14-day money back guarantee if you really hate it, and you won't because you're here this morning. All right. So let's get into the actual report. Alibaba's up 6% on a great profit beat. Facebook's up 11.5% with record profits out of their company, erasing some of the trouble they've had in the press lately. We've all forgotten about that now. Investors are happy, up 11.5%. Microsoft's down 2.7%. PayPal's down 3.6%. So we really had a pretty weak earning period yesterday after the bell. Tesla down 4.8% as its CFO retired from the company. Elon Musk went on a tweet storm just 20 minutes before the earnings report. talking about all kinds of stuff. Interesting. If you want to look at it, you should go check it out. Visa's down 1.6%. We slid across the board, but the Federal Reserve really pumped the markets higher. It really gave it life. We've broken out of a daily resistance right now, and I think the next move is to the upside. I think the next 50 handles on the S&P 500 are to the upside. Mind you, there's going to be a little bit of downside test right now, and it has to hold its support, and then we go up. All right, Japan's up 1.1, Hong Kong's up 1.1%, China up 0.4, India up 2%. In Europe, all markets across the board green, 0.5%. Futures in the United States, Dow's flat at the moment, but was up 1.6% yesterday. NASDAQ is up 0.3 at the moment, but up 2.2% yesterday. Huge gains yesterday on the back of this Fed announcement, and it was all an opportunity in real time. Crude oil is down 0.2. Gold's up 1%. Gold continues to push highs. I think we're on 12 months highs now. And this is an interesting trend that gold's going up, because as gold goes up, equities typically go down. And not always, but this is a moment where they're both positively correlated. So take note of that. Gold is going to go up because the Fed was dovish. A dovish Fed means an erosion of the buying power of the dollar. The dollar drops, all right? And as the dollar drops, equities go up, gold goes up, and commodities go up. If we are at the end of this economic expansion and we're going to be due for some kind of a recession in the future, it's going to happen inevitably. The last thing that happens before a recession is a huge commodity boom. All right. And I think one of the benefactors of this could be oil. As a weak dollar continues to drop, and if we are at the top of an economic cycle, there's usually a massive boom in the commodities market. All right. In today's morning market update, or rather, sorry, today Bitcoin's down 0.5%, 3,400. Today's economic calendar, we had initial jobless claims come out at 253,000 versus 215 expected. So we got a surprise there. It's a little bit more people filing for unemployment insurance. And this could be correlated with the government shutdown, 800,000 furloughed workers. All right. At 10 a.m., we have new home sales. 10:30 this morning, we have natural gas inventory. 4:30, we have the Fed balance sheet and money supply. It'll be interesting to see how much they've offloaded on their balance sheet since the last report. I'm going to say this. Tomorrow's a very important day. Today is post-Federal Reserve trading. We had some gains. And I think today we might consolidate a little bit. Start the day with our 3 rules: trade less size, less frequently, and take profit quicker. And if you really start to see volatility and volume coming in, then adjust, scrap those rules, and take advantage of the opportunity in front of you. Tomorrow's a big day. At 8:15 in the morning, we're going to be opening our elite trading room once again. We did spectacular for the Fed. We're going to do great again for the NFP report tomorrow morning. So we're opening up 8:15 for all of our elite members, and we're going to trade that live. Tomorrow's jobs report becomes so important for 2 reasons. Number one is the fact that we had the government closure in the United States. We'd like to see how that's impacted the report. Analyst estimates are already way down from the previous month. And second, the Federal Reserve just said it's a tight labor market. And if we get a huge boost in this employment report tomorrow, given that the Federal Reserve has said the market's strong, but not as strong as 2018, that's going to be an interesting sign. All right. Equities might correct. A strong report tomorrow may be bearish. A weak report tomorrow for jobs will most definitely be bullish. So things have switched here, all because of Fed Reserve Chairman Jerome Powell growing some dove wings and helping the market fly away. All right. Look for a little bit of upside today, but consolidation and chop first. Manage your risk. Look to get long some dips. The opportunity will be to the upside at some point today. We appreciate you guys. Have yourself a fantastic day. Hope to see you in our futures course on Monday, and I'll see you tomorrow morning. And it's going to be the last day that we do a morning market update from this room. Don't panic. We're going to keep them going. We're just moving offices. See you tomorrow. See you tomorrow. Have a great day. Ciao. Wow, Boxy, I didn't even have coffee this morning. Motor mouthed it. Vicky, how's the update going? Oh, it's up. We got to buy you a new computer, Victoria. I know. Yeah, we got to buy a good one. All right, trade pros. I'm going to show you guys some levels here on the S&P 500. You see, we sold off to the overnight lows. I was speaking here. We're seeing a little bit of downside. There's one level I'm watching right now with huge amount of support and some active orders starting to get added there. I'll show you that. I'll hand it over to Victoria, talk about NASDAQ briefly, and then Boxy talk about oil. And we'll get started for the day. We got a great day ahead of us. there will be a lot of opportunity. So let's jump in. Let me start with the S&P 500.